Welcome. How's everybody doing? Hope you are doing well. My name is Andrew Kuhn, Focused Compounding, sitting next to Geoff Gannon. Geoff, how are you doing today?
I am doing well, Andrew. How are you doing?
Doing great. We hope everyone is having a great day. In today's podcast, we're going to be talking about this idea of doing good research. And I read a book recently called Best Practices for Equity Research. Somebody had recommended the book to me. I actually really did enjoy it. It talked a lot about doing good research, but also, different time management skills and stuff like that. Actually, stuff that you do yourself, where, for example, you pick certain time slots throughout the day where you, for example, check your email. Don't have that open at all time because it won't really allow you to go deep on a topic and stuff like that. So the book was really great. I recommend it to everybody. I'll put the link of it in the description if you want to read it yourself. But it really had me thinking about, this idea of just doing good research. And a lot of research, and what I think is doing good research, is actually outside of the 10K. Right? Okay. You can only get so much information from the 10K. And a while ago, you and I, we actually did a checklist for going beyond the 10K. Right. And we did a podcast on this. We haven't revisited this, but we've also grown as investors, because I think this was probably a year and a half ago that we did this. All right. So I figured we could just talk about this idea of doing good research, what that means to you, scuttlebutt, how to go deeper on ideas outside of the 10K, because the 10K really tells you everything about the past. Right. Investing is all about the future. Okay. So how do you even think about that before we even really jump into it? I mean, when you do, what is good research to you? So, because here's the thing, right? The numbers is all about the business itself. Sure. But it's all, doing good research is really learning about the business. It's really starting at that first item on the income statement, revenue. Okay. How do they make money? Yeah. And then trying to understand that. So what is good research to you?
So two things I would mention are, one, I've mentioned this one before, but in Cable Cowboy, John Malone talks about how his dad told him his best advice he ever got about math things was guess at the answers before trying to solve the problem. And so that's the first one that I would say is guess at the answer. So the most common thing is when you see something, you go, why would this be? So for instance, we talked about an efficiency ratio for Hingham HIFS. And one of my thoughts on it when looking at the call report and stuff was that maybe they make bigger, longer loans. Because if you make bigger, longer loans, which we could get into, that would make sense as to why your employees would make fewer loans, and then you could have a lower efficiency ratio and stuff, versus things like you could be in places where the rent is cheaper, your employees could just make more loans, things like that. If the loan size on average outstanding each year was higher, then that's what would explain the efficiency ratio. So you see something, which is that it's one of the most efficient banks in the country, which we talked about, but then you try to figure out, okay, how do they do that? Are they really big mortgages that they're making or something? If that's the case, then you could see how the efficiency ratio could be that way. So one is guessing is a helpful way, because then that leads you down to, okay, then I can confirm this or not, The other one is we talked about this sort of with Gainsco, is that I mentioned in Gainsco the risk to an insurance company of adverse selection. So adverse selection would be when the people who want your insurance are worse risks than the general population. You're kind of pricing off of the general population. So you have to learn to what extent that's a problem. One thing that I'm very focused on when looking at stocks is the potential for what I'd call adverse information. So what is the chance here that what I don't know is more bad than the normal amount of random stuff I wouldn't know? So I don't think it's very important to solve for uncertainty and stuff in a stock or a business or whatever. In general, it's most important to focus on those things which could be unusually bad that you might miss. So let's say, and sometimes you can be tipped off to this by people would say why the stock trades this cheaply or something. That's usually the argument that people do, is they look into kind of trying to refute the bear case or whatever. I don't know if that's the best idea, but an example would be NACO, right? Is what about wind versus lignite? So you try to do research into that specific thing, because what I might not know about wind could be worse than just kind of normal not knowing things here. Or we talked about OTCM, it could be regulatory things or whatever. So there could be things that I don't know and that are particularly bad. It's easier if I know a lot about the thing that's particularly bad. That could be potentially bad. The toughest ones why I would drop a stock quickly is because I think it's very hard because I'm aware that there's something I don't know, that thing could be very bad, and that I don't know how to figure it out. And so we've talked about that before. Like a common one is like Gainsco is a good example. Because we didn't talk to management, I was never going to invest in that company. And the reason for that is just stuff about the non-standard auto insurance industry, where without talking to management, without getting more of a feel for culture, something about that, I couldn't invest in it. Whereas like I could gather enough data on Progressive on different things and stuff, as opposed to like on Gainsco. And so in that case, the fact that it was like an overlooked stock was a real problem, because I couldn't gain information on something that could be very bad, that I could be, misinterpreting on stuff that we talked about with their loss ratio, basically.
Mm-hmm. When you look at a company, you're never going to know absolutely everything about a business, right? Mm-hmm. I mean, most CEOs don't even know everything about like what's going on in their business. So I'm just kind of curious, like how you break it down. Is it really figuring out, here are 3 to 4 very important things to the investment thesis, and really honing in on that? I mean, how do you think about that? So it's like, okay, let's talk about a theme park, for example, or a movie theater, whatever you want to talk about. It's like a theme park. What's very important is, admissions, getting people there, and then how much money they spend at these theme parks and stuff like that, right? So there's a few key drivers that would be very important to the investment thesis, and then maybe it's like financial, how they, finance things or whatever. But how do you typically think about that? Is it really breaking it down to a couple big important things? So in your situation about Gainsco, to non-standard auto insurance, what are the key drivers to that investment thesis, just as an example? Like, what would you think about?
Right. So the things that I'd write down, like literally on a 10K, that I'd write down the questions. And if you ever see me mark out 10K, I literally have these questions written down. They're usually things with question marks and stuff. And the example with Gainsco would be, why did their loss ratio drop? Will it stay low? And what is this from? And then guesses about things like, literally, could it be they've gotten tighter about not paying out some stuff and things like that? Could it be stuff about legal stuff? Could it be, did they switch what states they were in? Did their mix of business change in some way? Did they get better at doing this because they said, we launched this new internal program that we have for our technology stuff that's better at helping our people underwrite and stuff like that. Those sorts of things. It is focused in on a couple things like that. Mm-hmm. So it could be that simple depending on the business, like giving the stock proposition, right? So giving the example of like NACO, right? It would literally just be about the durability of lignite. For how long will this last and stuff for the mines that they have? What's the probability that these mines will close down within a short number of years because of the price? It would be totally different if the price was different, right? And it really depends on the price of the stock, because that determines the risks that you're taking actually as an investor, which are very different depending on the price. It could be the same business. So I am often interested in researching the business to get an idea of the fundamentals, the economics of the business, but it does depend, because like we've talked about like Monarch Cement or Virtue Motors, right? They've at times traded at book value or below book value or something. So the question would really just be, how likely is it that this asset to its industry and stuff can really be worth less than that book value? And so it just comes down to questions like, does it earn a decent return on it over a full cycle? And what do private transactions go for in this industry? And what kind of things could cause problems that way? It would be totally different if you're paying 2 times book. I'm not saying that 2 times book might not be the right price for these things sometimes. Maybe it is. But it's a totally different bet. So you need to gather different kinds of information.
And we talked about Zoom Technologies, their valuation at one point, and you're like, well, I mean, like, what's the total addressable market? How much do they charge customers? And it's like the current valuation of the company is baking in so much future growth. So if you were to invest in it, and we did talk about it, you talked about what you would focus on, right? That future growth. So that's a good point. I think about, what's the company currently baking into the price? How much optimism is in the price to sort of decide like what's the key driver to the investment thesis, because just because it's a great business doesn't mean it's a great investment, obviously.
Right. Yeah. Zoom I thought was pretty simple because we were talking about it, and I really just had 3 questions, which were, how big do you think the total market can be? How much can they charge? And what part of the market can they have? So some of it was fairly simple, like to think, okay, is this possible? What part of the market could they have? I guess they could have like virtually the whole market, because the amount that you're charging is so low per person versus the value that people seem to get from it and stuff. And then the other questions were things like, how big can it get? And then you think about, the entire world and all that sort of thing. And, what price would people pay? And that's kind of what I asked about. Now, that's hard sometimes because, we used Zoom a little bit. And I was shocked when you said that we paid for it. Mm-hmm. Because there's free services that you don't pay for and stuff. And I thought it was I didn't like the service as much as those free services. Mm-hmm. But it's such a low amount of money that some people might use it for those things. And the biggest thing with this is that it's very easy to distribute it with you not having to do anything. So you don't have to do anything. It doesn't cost you anything. It gets spread by other people. It basically goes viral, and that's makes the economics of it very simple, because when we're talking about the marginal cost of things and stuff, it's very simple that way, versus things like when we talk about the insurance things and stuff, it's like the cost of acquisition of the customer. So when you explain the business, and we talked about the market cap, I didn't think it was an irrational market cap. I want to buy the stock and stuff, but I did not believe the price of Zoom was irrational versus what people actually seem to believe, because people seem to believe that everyone in the world would be using it stuff. And I was like, well, if that's the case, it's pretty cheap.
Mm-hmm. How do you typically think about supplier relationships with companies and doing research around that?
Yeah. So the biggest things I'm concerned about when doing research in terms of stuff where you could get information that other people might not have is, why do people make the decision that they make? Who are the key decision makers? So the key decision makers, I guess when we talk about these things, it's always easier to talk from a consumer perspective, because it's just easier for people to imagine that. But the key decision stuff would be, why do you make the decision that you do? And I'm much more concerned with that versus, do you like this product versus that or something? I actually don't care that much about that. So I don't like those questions. So I wouldn't want to ask someone, do you like consumers, do you like Mercedes or BMW? I'd say, if you chose between Mercedes and BMW, why did you choose? And ask each person, who bought each of them. Because that answer is more useful in understanding the positioning and stuff. So a really good example is, I had owned stock in Breeze Eastern. And a big reason why I was interested in that stock, in part, was I had learned from people who did search and rescue helicopter operations. So they actually ran it for that fire department or that state or that city or whatever. That it was very cheap and not very hard at all to use a kit, basically, to switch from one supplier to another. So a model of a helicopter or whatever might kind of have this option to add on Breeze Eastern. But they had this competitor that you could switch to, and they were like, here's how much it probably costs, and here's how many guys that work here could probably do it. And they're like, it's not hard. It's not very technical. I could show you, there's a manual that you can get and stuff that's it's more complicated than IKEA, but it's not something, it's not a lot more complicated than IKEA. Anyone who could do any sort of engineering stuff could easily do it. So, and it was very cheap and didn't take long. But he was like, but I would never change, right? I just couldn't imagine anyone, and I can't imagine anyone else changing and stuff. That's the answer that I wanted, as opposed to the answer that the reason they weren't changing and stuff is because it's very expensive. And that was the only reason.
Did he say why?
Yes. He felt there's no logical reason why you would switch from one to the other. And that's the best answer there is, to be honest. Mm-hmm. So if you think that Coke and Pepsi are fundamentally very, very similar in price and quality and everything, but for some reason you've already committed to Coke or Pepsi, that's the way that you're the most loyal customer possible. If you believe there is a significant difference between two choices, that becomes a bit more of a problem. So that's what I mean in the if you give an example of Mercedes, BMW, or whatever, but let's say you compare Mercedes or BMW versus Toyota. That becomes more of a problem when you talk to people, because there are actual reasons why they might say, well, it's a trade-off between this thing that I care about and this other thing that I care about. And at some point, I could be convinced to make this sort of switch or whatever. Versus if you think that two things are fundamentally much more similar. So if you think they're much more similar, but you're loyal to one or the other, that's the best answer. The worst answer is technology. That the worst answer that you can ever get is they have better technology. You never want to hear that answer.
Is that because it could constantly change?
It could change. Yeah, it could change. And also they're telling you it's a specification thing, basically. So in some way they can measure it and stuff. So like, it's much better if they say they like the interface or they like the training that they give or they like whatever about it. Much, much better. In the example that I gave of the aerospace parts thing, Breeze Eastern, the answer they gave always was there are two reasons. One is so you ran a fleet with, like basically a helicopter manufacturer. So let's say you always used Airbus things or whatever. There was just a default option with Airbus to take, and they always took that one. So for the model that they had, there was just like an add-on to add on this rescue hoist or the other one. But then the only reason they would switch after that basically was customer service, because customer service in the industry was very poor. Because the companies had very strong market power. So they had a policy of basically not keeping sufficient inventory on hand. So what would happen is you would need a repair, and they'd basically be like, oh, we'll make that now. Not let's have sufficient parts on hand so that we can meet demand for that all the time like you would in most industries. And so they kind of abused that kind of thing. So because of that, that meant that some people got annoyed with them and then would switch. They were like, that's the reason why I would imagine it happening is because of a customer service problem, which is the answer that you want to have usually. That we've talked about that before. You want an industry where you kind of have to lose your customer. Whether that's
like really mess up.
Yeah, like whether that's an insurance company, a bank, an ad agency, that in general, it's very hard to take a satisfied customer away from another, because for the most part, people don't search for something else. That's what you always want. Any customer that's in search mode is a much more valuable lead. They're a hotter lead, and they're cheaper for anyone else to acquire, and they're just like that's the big danger. So that's why I say, like, when I give examples of like industries I'd rather not be in and stuff, an industry that's kind of tough is like, say, major appliances, right? Because everyone is going to be in a situation where they look at side-by-side major appliances. Same with cars. I'd rather own a car dealer, because they might not think that carefully about which car dealer to go to, than a car company, because the car company, they're going to look at two or more cars. And you don't want that. You don't want to be in a business where they're looking at multiple things next to each other and comparing them. Like, you don't want any business where they're talking about the specs. I don't want them to be in a business where they're talking to you about what the horsepower of this one is and the gas mileage. That's terrible, And you want to be in a business where none of that is what they're talking about. And so that I always find the most useful is to talk to people about why did you make the buying decision that you make. And it's very helpful. And sometimes they're pretty honest about it. And sometimes it might strike people as pretty irrational about how they're thinking. Because I have talked to people in some industries where I've said things like, if they raised the price 3 or 4 times, what would happen? And they said, the best answer I had ever of that was someone said, I'd buy more from them and less from the competitors. That one was fascinating. But in some cases they said it wouldn't matter, because it's right. They said to me, look, it's about 0.5% of the cost of the project. And so if you raised it to 1.5, 2%, something like that, I'd still do it, because I use this supplier on all these projects that I do. Even if I would only change my bid on these projects by a few percent, and it has to get to the point where I would switch for all my projects, because I'm not going to just switch for one or something. Like, I trust them, because I don't want to run late on delivering this to the end customer. So it has to get to the point where I would really switch for everything. So that's not the issue. It was like, price is not an issue. The issue is like reliability of stuff and things like that.
How did you find the right suppliers to reach out to and to ask these questions and stuff? Because for every company it's different, right? So it's like, if you're looking at a bank, and maybe like that relationship with their customer is very important to the stickiness of the deposits and just to the bank in general. It's like, how do you do research on that? Do you talk to people that have, that bank with a certain bank? Is it reading customer reviews online, trying to get a sense for the durability of all that? Because from this podcast, really what I think you're, basically saying, it's all about the durability of the product. Yeah. Right. And I'm just kind of curious. So like, how did you even go about reaching out to those suppliers?
So
this is about, doing good research.
Yeah. In general, the easiest thing to get people to talk about and stuff is their own job. So it has to be something where you can find out that they You just need to find the person who has this job to make this decision. Now, some people may not talk to you at some companies because they've been warned sort of about it or whatever. The more aware they are that they're working for a public company, the more that there's negative publicity associated with it. Like, for instance, we could talk to people who might talk to things about Breeze Eastern. If I tried to do the same thing with people talking about TransDigm once they were in the news and stuff, none of their customers would talk to me probably, because they wouldn't want to talk to me because they think that no matter what I say, it's some sort of press thing or something that has something to do with TransDigm, has something to do with the industry, whatever, you know? So anything controversial will be a problem. But at other times, it's fairly easy. Like, I mean, I talked about America's Car Mart or whatever. I didn't really have an experience where people who ran branches of Car Marts were reluctant to talk. Mm-hmm. They were reluctant to say some things. I think I mentioned like a couple of them, I think, basically were saying we modify loans sometimes, but I'm not supposed to use the modification word, you know, that kind of thing, which is not a surprise. And it's not like the company denies that happens or whatever, but I mean, like they are a little reluctant to use whatever sorts of things. But no, they're happy to talk about their job. So you just have to find the person who makes the decision. In the case like the Breeze Eastern stuff, it was literally, that's kind of easy because when they take orders and things, they might put out press releases because they're like proud of it or whatever. So they'll put out something that's like, we've just taken delivery of 6 Boeing, whatever, and they're equipped with, and they literally say what it is. So you just do searches to look for people who took those deliveries and stuff.
I was surprised when I called franchisees how willing some people were to talk about the actual franchise themselves and their experience working with the company and stuff like that.
In general,
and even like give me like numbers, like what average numbers that they do or what the best one does. I mean, you know,
in my experience, it is very, very easy to talk to people about their jobs, and in particular, people love it if you ask them why they make the decisions that they make. The one of the most common answers that I've gotten is my boss has never asked me this question. So like for instance with the Rescue thing, they're like, my boss has never asked me why I pick one over the other. Never. And they're fascinated by it. And they're like, oh yeah, let me think about this and why I do and everything.
Like, should I be doing this?
But they're very willing to talk about how they make the decisions that they make. Mm-hmm. They may be less willing to talk about certain other things. I think cultural things can be hard to get answers to. I think sometimes things about competitors can sometimes be hard, stuff like that. But stuff about their own, why they make the decisions the way they do, their own thought process is very easy. It's always best to talk to someone. I think it's always best to talk to someone in an organization zeroing in like 100% on their job, on their function. So like the franchisee things was really good for you because basically they're the one person on site who's making all of these decisions and stuff. So you get everything. It's like talking to a CEO or something really, you know, it's really useful that way. Whereas for other people, it may not be. If you're talking to someone at a book company or something and they buy books, they can tell you a lot of things about what they do and they'll give you really good answers for that. But what they do is actually a little different than like what the company does and stuff. And so it may not help you in terms of the business because they know so little. You'd be surprised how little some people in the organization know about why other parts of the organization are doing what they're doing. Many people in an organization are not very financially oriented. So that's a big thing that you need to keep in mind. They're going to be much less financially oriented than you are. And you're going to be surprised by that if you're used to dealing with investor relations people, CFOs and CEOs. Other people in the organization do not think as much about money, to put it honestly, as that, and may not think about some of the things about how the company makes the money the way it does. Like if you work at a movie theater chain and your job is to pick which movies to show, you don't necessarily have to be that financially sophisticated a person to do that. You need to be tapped into tastes that people have and what do you think is going to outperform, like in terms of be a hit. You don't actually need to know that much more than that. You just have to be a good programmer in a sense, you know, and being a good programmer of what people on TV or movies or whatever people want to watch does not really require you to know a lot about how much different things cost and how the company makes money and all sorts of things. So, but it would be great to talk to someone like that. Mm-hmm. You'd want to talk to them, but they just don't know as much about those other sorts of things.
I always hate it when I'm trying to speak to a company and I have to talk to like an investor relations rep. Mm-hmm. Or maybe they like outsource it to a firm that handles a bunch of different companies. I just feel like it's not as productive. I'm like, I feel like you're telling me stuff that I could read myself on the internet and not get like a good feel for certain things, or just very general.
Yeah, I haven't found the investor relations people to usually be that useful. And I don't even, I guess one thing that they're useful in that we could talk about is shareholder base. Mm-hmm. They have a very high awareness of who their shareholders are. They may also have some awareness of kind of capital allocation strategy and stuff of the company, like some idea of that. I say those are the two things that they know pretty well. And we are interested in that, what the shareholder base is like and things like that. So
it's always one of the questions.
Yeah, I think they do have a pretty good idea for that. And we also kind of avoid companies that have investor relations things and stuff, I guess you could say, because we're looking more for overlooked companies. But yeah, I've always found that difficult. And then the second least useful one I found is CFO. So investor relations is the least useful. CFO is the second least useful.
Why is that?
Because I already know most of the things the CFO is going to... I've read the reports. I can bring whatever thoughts I have about what you would be doing if you were the CFO and stuff. I've read the 10K and stuff. Usually if I'm talking to CFO or the head, accounting finance person in any organization, we're very much likely to be like talking the same language on the same wavelength or whatever. So it's just,
They also know what you want to hear too.
Yeah.
By the way.
I'm not going to learn a lot of new things from that usually. I would say the CFO and it's fascinating because I think one of the probably the most common when you read things online, discussion boards and blogs and things and stuff. I think the most common when they say they talk to some other companies, they talk to the CFO. And I think the CFO is the least useful to me because the CFO has the least amount of information they're going to give you that isn't in the annual report and stuff. Now, they might give you projection stuff. CFOs are big on projections. But the projection, as you know, the projection stuff is not the stuff I'm the most interested in. I'm like more interested in what are the product economics and things like that.
So I know the answer, but who's the best person to reach out to? The most productive person to get a hold of?
You know the answer to this.
I think I do.
Okay.
General managers.
Yes. Yeah. I would care most about talking to general managers.
Boom. I know it.
So, it depends on the company because some companies don't, it's a little complicated in terms of the general manager stuff. So in that case, it would be it's often the people who interact with another firm. So if it's a business to business thing, it's the people who are the buyers or sellers basically. But, so like computer services, for instance, right? That is an example that we wouldn't there have information on like general managers. It's not a thing there, but the people who, how do you land an account, is kind of useful information. How do you keep it? Those are incredibly hard to research in my experience. Consulting firms, core processors, ad agencies, things like that. Each account is so small. It's so specific and so internal to the industry and stuff. And it's so like hidden from view from everyone else that I just think that professional services stuff is very, very hard to get actual research done on. I like the businesses and stuff, but it's just very hard. Like, why did you choose this consultant? Why did you choose this ad agency? It's just very, very hard. But yeah, general managers for retail oriented things and stuff like that, it's definitely general managers because they're like duplicating the same thing over and over again across the country that way. And they have the most kind of information about how the business really works.
Yeah. I think as investors, we're always told to, focus on cash generation, free cash flow, net income, really things that are further down the income statement to the cash flow statement. But I really do think doing good research on the business, it all starts with those first two lines on the income statement, revenue, and then, cost of goods sold and like gross profits, and really spending your time there, understanding how the business actually works, why it works. And you have a quote that I would love to tweet a lot because it always gets a lot of engagement, how you learn a lot. The further you go up the income statement, the more you learn about the business. The further down you go down the income statement, the more you learn about who's running the business.
Yeah.
So I think doing good research, it all starts with those first two items on the income statement.
Yeah, and like the stuff we're talking about could be 95% of the time you spend. It's not 95% of the importance, unfortunately. The truth is that like what price to free cash flow and stuff is trading at could be like half of the importance of your eventual decision. But you can see that instantly. You don't need to do a lot of research.
That's not research. That's just glancing.
Right. But you need to then say, okay, how at risk is this free cash flow or whatever? Or, okay, price to book is less than 1. Okay, how solid is book value? And that's then your research. The research then takes, it could be 20 times longer than the financial analysis that you did initially. It's not going to be 20 times more important, but it's verifying and figuring out the stuff that, of like I said, like what bet you're making.
Got it. Cool. I want to thank everybody so much for tuning in with Geoff and I on the Focus Compounding Podcast. Hit the subscribe button if you have not already. Go to your app store, either on Google Play or the iOS app, type in Focus Compounding, and guess what? You're going to see the best app you've ever seen in the world. And it's called Focus Compounding. If you want to sign up, click the link down below. Go to focuscompounding.com/app. Thank you so much to everybody for all the support, and we will see you in the next podcast.